The US government had just released the latest data on PCE Personal Consumption Expenditure Index this morning. It impacts everyone regardless of whether you're an investor or not. Now, if you know about it, and you can be a smart investor, so stay with me here. We often hear about CPI, Consumer Price Index, as the inflation indicator, as it measures the price change in goods and services that we typically consume in our daily life. On the other hand, PCE measures the actual price that people pay on their daily consumption. So it reflects the reality and how much people are willing to and able to pay. The annual PCE in July showing that it's 3.7% instead of 3.6% expected by economists and market analysts, which means inflation is higher than expected. Why is it important for smart investors to understand CPI PCE? Well, not only because it impacts our pocketbooks, our daily life, our business, but also our investment decision. As inflation indicator is one of the two key factors that the Federal Reserve consider when it comes to adjusting interest rate. Higher interest rates means higher cost of borrowing, higher cost of financing business operation and expansion. So it would have bigger impact on capital intensive business, such as a lot of the AI business. So understanding this would give us an advantage as smart investor. Right now, the Federal Reserve banks are meeting in Jackson Hole, Wyoming, discussing their next move in interest rates, which will be determined and announced in mid-September. And it will impact everyone's pocketbook, business operation, as well as investment decision. So stay tuned for more.